Good afternoon, everybody. I'm live on YouTube, I'm live in the virtual trading floor. I think I have all the issues fixed for YouTube, but definitely let me know if there's any echo issues or beeping issues or notification issues or something like that. I think it should all be taken care of, but that feedback's always appreciated. Let's hop in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. Okay. Yeah, it really was a crazy day. I titled the YouTube video. I gotta, on the spot real quick, come up with a title every day for what the afternoon meeting is gonna be. And it was just New Year's, same market, right? Just another crazy, crazy day. We had a nice gap up this morning. The gap up got faded down a little bit. Then the market opened with a gap up, but off of the pre-market highs. We ripped off the open. Things were looking solid. And then it turned into a total, complete failure. Look at this. When you look at my normal 5-minute chart here, the way that I normally have it, you can't even see today's high. It's so far in the stratosphere. I got to scroll out to have 3 days worth of price action, actually be able to see this shooting star that created highs. And I still don't think that this high even hit the pre-market high. Is that accurate? Let me double check. Yeah, even there, we didn't get back to pre-market highs. Pre-market highs were almost trading at 387 in the SPYs. And this is about when I woke up. Or about when I logged in, I should say. I guess around 5 a.m. local. And then we started pulling back. And then next thing I know, we got hit real hard here at 640. Stabilized a little bit, tried to bounce a little bit. And then off the open, it looked like it was on. We ripped off the open. Everything I was looking at to go higher was working its way higher. I'm always patient on opens on these gap ups, though. You know, if momentum is coming in the way it kind of was here, I'm always very cautious on chasing price. You know, if the ADMA hasn't caught up to lows, if the ADMA hasn't caught up to where I want my stop loss to be, I realize that there's a higher probability of getting shaken out. So I'm always a little bit patient on these opens. So I certainly didn't get hurt from that move. As a matter of fact, I was booking profit on longs into that move. But just disappointed that the market could not even attempt to defend itself on the way down here. You know, we ripped down to the ADMA, hardly attempted to bounce. There really should have been a bounce here into the ADMA and into lows. Well, I guess really we shouldn't have pulled back even as heavy as we did. We should have pulled back maybe to, if we're going to be healthy, 384.50, stabilized a little bit, maybe wedged out, let the moving averages catch up. If we're going to be really healthy, we shouldn't even be retesting lows. But you would think at a retest of lows into the ADMA on the 5-minute for the first time that the market would attempt to at least stage a bounce. It didn't. It filled the gap. You would think on the gap fill into the equilibrium area that the market would at least attempt to stage a bounce. It didn't. It kept going down. IWM was a little bit stronger. So when we first got our very, very feeble attempt at a bounce, it was actually when the IWM, which was stronger, was filling its gap. SPYs were a bit weaker. They went into red territory. Finally, we attempt to get a little bit of an oversold bounce. Or do we? Not really. 2 inside fives in a row. We call that a shooter on the 5-minute when you get 2 inside fives in a row. That really is a continuation pattern. Continuing what is the hard part, because you could make the argument that it's a pullback to where we were yesterday, or you could make an argument that we should be continuing down because it's where we came from. That's what happened. You know, little rest here for 10 minutes, we continued lower again. And it wasn't until we tested 380 for the first time, which we know is one of our key important levels that we outlined in the morning meeting, that we actually attempted to stage our first real bounce of the day. And we looked okay here on some of these names into this bounce. The IWM bounced really well. I remember looking at, like, there were names that were, good stuff, Baba. There are names like, I was specifically looking at stocks when the market finally gave its bounce, of names that were relatively strong and stabilized. And this is a common trade that I like to look for. You know, market's getting hit really hard. I'm expecting that this market has to give some sort of price correction eventually if that price correction happens, meaning that the market snaps up, what do I want to try to buy? Well, I like looking for these names that did not continue down further on the market, like this Meta. And then you could look at the intraday resistance of the consolidation that it created when the market continued to go down. This is the type of name that I want to be able to go long. And look, the market was still garbage even for the rest of the day, but yet that Meta trade actually still worked out pretty well, that we called this long back through like this 123 area. And again, it was just recognizing this stabilization, the overall relative strength of the stock was still showing. The NASDAQ, the S&P is red at that point. It's continuing to go down, and this thing here is completely stabilized. So you take the trade long back through the kind of base resistance, the stabilization resistance with the relative strength for the long. So I remember looking at Meta in that spot. I remember looking at, was it Shopify? Shopify as well for a break back through 35. Similar situation, maybe not as strong as Meta, but filled its gap. Market's continuing to go lower. Market's red. This thing is holding on to green territory just barely, which does indicate some relative strength. But the big thing for me isn't just whether or not it's green or red. It's how the market is acting in that moment, or how the stock is acting in that moment compared to the market. Market continuing to bleed lower. This thing is stabilized. What's the resistance of the stabilization? This is $35. If the market can give a bounce, I want to be buying these relatively strong names through that little intraday resistance to see if I can get a trade. And it gave a great initial bounce in the Shopify. Pulled back very heavily. Depends how tight you trailed it, or if you were trailing it, or how you were trailing it, and if you got stopped out in this pullback. With the way that I trail, if you bought back through 35, you never would have gotten stopped out in this pullback. And then it gave another run here into 36. And again, it's mainly fighting the market. But that's that relative strength, and that relative strength can really pay if the market can at least hold in. And that's if the market can at least hold in. There were times during the day today where I thought certain things looked so good, whether it was off the open or, again, like a Shopify on the break of that base to the upside. I was like, these things just look so good. If they could just have some market help, some of these could be monsters. But we never really got any market help. I guess we got a little bit of a bounce here into the close. We were able to recapture and close above the important 380. But that was it. Off the open this morning, man, I had feelings of 2013. I'm starting to show my age. Oh, that's exactly 10 years ago. The first day in 2013 was the low of the year for 2013. My memory serves me correctly. Let me see how good my memory is. My old age. $2013 begins right here. I remember we sold off a little bit into the end of 2012. Last day of 2012, we got bid up a little bit. And then the next day, we had this massive gap to start the year. And this was a news-related gap, and it's something to do with the U.S. government funding the government. Basically, there was a lot of fears at this time that the government was not going to fund itself. But they made a last-minute deal after the market had already closed for the year to fund the government. So we gapped up really big. And that was it. That was the low of the year for 2013. Not only did we gap up on that day, but we continued that day, and that was the start of a big grind. Now, not saying it never crossed my mind this morning that the market today was going to be the low of the year and we only move up. I guess you never know what can happen in markets, but given the fact that we are in a bear market that's been defined by a tremendous amount of volatility, I would say the probability, even if we closed well today, even if the opening move went, the probability that would be the low of the year would be extremely small. But I still had that feeling off the open of, wow, this kind of reminds me of this gap up and just go with momentum here. My thought process for today was treasuries were down. Interest rates were down. Treasuries are up. Interest rates were down. That combined with a January effect, the tax loss harvesting that had already been done, I really thought some of the weakest names, which are some of those longer duration equities, tech stocks, could be strongest today. And off the open, some of them were just trading incredibly well. My concern on the other side was the dollar strength. We did talk about that this morning as a layer of probability against the market being able to go. But like I also said, it seems like over the course of the month of December, that typical correlation that we saw in most of 2022 between the dollar and the equity market seemed to dissipate a little bit. They're blurry in the VTF. Is it blurry in the YouTube also? If anyone can let me know about that, I would appreciate it. I'm in the middle of a snowstorm here. It's like dumping snow out, which maybe, I don't know, is creating some issues. Looks good for John. Good. So I'll try to figure it out. It could just be this storm I'm in. It's like insane how much snow there is here. I love it. I'm so excited to be back. Anyway, back to what I was talking about with the market. So yeah, just a lot of disappointment that we couldn't hold this rally here off the open, and then the price action got pretty trashy. It really seemed like it was Apple and Tesla ruining the entire market. Apple was so weak. Weak off the open, went red first, but tried to give this bounce. Actually gave an inside 5 and up here off the second 5-minute bar of the day, and the opposite thought process was still kind of going through my mind when Apple was making highs. Was, Apple is weak and potentially is holding the market down. Imagine if Apple can just wake up and go. And then the opposite happened. This move here at Apple to the downside was so bad. Oh, man. And we said we didn't like Apple in the morning meeting today. We said it wasn't a name to go after, to the long side at least. But the way they sold this thing was just incredible. Just red bar after red bar after red bar, barely a pause. One little pause, which was a continuation doji here, leading to new lows and new lows. Broke 125, broke all of 2022's lows, gave basically bearish consolidation, downtrend continuation beneath a major support level. Apple does not look good. And it's only a day one, right? Thursday and Friday last week were rest days. Let that ADMA catch up, as Apple could continue to deteriorate the market. It blows my mind when I see Apple sell off this hard, to be totally honest with you guys. To see Apple sell off this hard, this type of company, when it's already so far off of its highs. It's not like the stock is going to stop buying itself back. It's not like Apple's going to stop buying Apple stock. They're not going to stop being a cash flow machine. But they got downgraded this morning, and there was a warning that was going around that they were asking suppliers to produce less earbuds and iPads and a couple other things. So it seemed like it really got to the stock. And then the other one was this Tesla. And I guess Eddie was all over it. I actually thought that Tesla was going to try to stabilize today off the open. I didn't love the short today. The short worked phenomenally well for Tesla. They had their delivery numbers come out, and they were light. They still broke that 400,000 for the first time, I think, but it came in light versus expectations. And I guess, technically here the market was also set up for Tesla downside continuation. You had this extreme extension. That extreme extension was satisfied over 3 days. The ADMA caught up. I thought that there was room for a little bit of a further bounce here. I really thought that this Tesla was going to see the low 130s before creating a pivot and working its way back down, but the market didn't even wait. A little bit of a bounce back to the ADMA, the lower band of equilibrium. You lose your extension at that point. Couple that with a little bit of negative news, and they just absolutely wrecked Tesla. So it seemed, and Tesla was down pre-market, it gapped down, it continued. It just seemed like the market and so many things were trying to look great this morning. Some of the names we were looking at looked fantastic off the open. The financials looked really good at certain points today, which we were looking at. JP Morgan looked really good at certain points that we were talking about. Some of these tech names, Meta, looked great today at certain points. Snap off the open, you can't even see the highs on my chart. Looked great off the open. Shopify had some positive news. It looked great off the open. There's a bunch of stuff out there. Amazon and Google were really trying to participate this morning. And it really just seemed like Apple and Tesla just wrecked this entire market, brought us down. And at the end of the day, we closed negative. S&P's down 0.5%, Qs are down 0.7%, and the IWM's down 0.65%, and that's how we're starting our year. So new year, same market. And I think that's all I got for you guys. I closed out of my Tesla position. I had a couple decent trades in it despite how bad it traded, but I still finished down small in the name, which is unfortunate. But I mean, I was trading it long, so look what the stock did. The fact that it was only down small and not down big, I guess, in and of itself might be a little bit of a victory. Yeah, that's all I got. So happy to take a look at what you guys got, what questions you have, and let's make sure we crush this new year. First thing is from Robert on YouTube. I know you already went through 2023 market big picture in the VTF, but would love to hear your expectations for 23 here. Thanks and Happy New Year to all the VTF members. Sure. So it's interesting where we're at with the S&P as we go into 2023. I don't recall there ever being a year where some of these sell-side analysts from the banks were so specific, meaning about, first half of the year, big sell-off, second half of the year is going to be a big move higher, therefore lows in the first half of the year is going to be a huge buying opportunity, and then at the end of the year we roughly end where we started. That seems to be kind of the general consensus in one way or another amongst the major, kind of sell-side analysts. I think that the dollar is going to be extremely important on how that all works out. What this dollar is able to do. I think that there's a real bull thesis that you could have. So the bear thesis is predicated on earnings weakness, and that's predicated on economic weakness. And that's why the sell-side analysts think that we're going to sell off hard in the first half of the year as, the impending recession, rears its ugly head. But the market is a forward-looking mechanism. So I think a lot of economists, sell-side researchers think that the recession will end at like the end of 2023, which again, historically, the stock market bottoms like I think 6 to 8 months or 6 to 9 months before the economy does. So a lot of people think that, again, the economic deterioration is going to create weak earnings, and that's going to bring the market down, and absolutely could be true. So that is generally going to be the bear case. The bull case that I've argued does stem from the dollar. A lot of the most important companies that are out there are multinational companies like Microsoft. What have we seen from Microsoft? It's the one I keep using as an example. The last couple of quarters is the warning that comes from Microsoft, the earnings warning on their guidance, specifically comes from FX concerns. It specifically comes from the strength in the dollar. Well, the dollar's been downtrending. The dollar's been downtrending for a couple of months. It's broken key support levels here. It's worked its way down. So if you've got these multinational companies where the dollar's weakened out a little bit, and that's been where the main portion of their warning comes from, maybe these earnings reports are not the end of the world. That would be my bull thesis. And I also think that expectations are so bad, and we saw this on one of the quarters in 2022. I think it was the July earnings season, and I had never seen that before. And then there were statistics that were supporting it, where basically the average company that reports in line was up significantly more than usual. So, and I don't remember what those statistics are off the top of my head, but let's say at the end of a earnings season, the average company that reported in line is up 0.5%. I'm making those numbers up because I really don't remember what they were. That earnings season, I think it was the July earnings season. If the average normally is up 0.5%, the average in that earnings season was up 1.5%. Like it was significantly better price action, and that was the last earnings season that I recall where we went into it with just extraordinarily bearish expectations for earnings based on the economy. Kind of very similar to what we're going to be running into on the next one. But the bull case on that is the weakness in the dollar. So if you can have the dollar continue to deteriorate, and you can have inflation not give another massive spike, which I do think that inflation is going to ebb and flow. I don't think it's going to be straight down. I do think that there's going to be surprises along the way. And you're able to just kind of be in line on a decent amount of reports, the market could rip on that. It could actually rip on that. And you couple that with the fact that it doesn't seem like anybody actually thinks that the S&P can go up. Like, at the best case scenario I've heard from some of these analysts is a January rally before a February through May sell-off. That's kind of been the best case that I've seen. So so it doesn't seem like anybody's positioned for that rally. And the thing that always kind of begs the question in my mind that I can't help but think about when I think about how specific these sell-side analysts are being with their bear call for the first half of the year, which is then followed by this great buying opportunity into the end of the year, is that the market's a forward-looking mechanism. If everybody thinks that the SPY is going to be at 400 at the end of 2023, why is it going to bother even making the trip down to 320? So, I don't know. That's kind of my general thought process, but we got to let the market confirm it. You know, most of December, really even the second half of November and most of December, outside of this one downdraft that we had off of the CPI, most of December has really been a range month. You know, we ranged in the beginning of the month, and we had the CPI and the Fed that did give us the one leg lower, and then we ranged the second half of the month. And now here we are in January, still within that range. And there was a chance for this market to try to break out of the range today, and it failed to do so. So let the technicals be your guide. I know Pat has really been warning everybody here in the VTF a couple of times today. Make sure you know your downside support levels, because if they break, they could really create some excellent shorting opportunities. So I second that thought process. You know where this market can really break down. That 375 level for the SPYs, I think, is really a really important support level, potential breakdown level. Where if we break this 375, then we, could have another one of these really big leg lowers that we've seen so many times in the market. The technical bull case, and I do think that there is still a technical bull case, but it starts with us breaking out of this range, which we failed to do today. The technical bull case is that, December certainly didn't look good with this pullback on the CPI and the Fed. But what if very, very big picture, we've been in a downtrend, right? The large time frame. Lower highs and lower lows, kind of all the way down. And up here at 410, we retested this downtrend line. We retested the declining 200-day, which again usually leads to failure. And we failed. But a lot of times the way these trend lines break is they fail, but they don't go to new lows. So we failed at the trend line, the big picture trend line. We failed into this 200-day area. The bull case technically is that this actually becomes a higher low, and instead of a lower low, we go into a pattern of higher lows and lower highs. Higher lows and lower highs is a wedge. And then bulls would need the wedge to break to the upside. Technically, a wedge is a continuation pattern, so it should continue the trend to the downside eventually, but it is bulls making a stand, and therefore there is a chance it could break up. But if that's your case, if you want the bull case for these technicals, if you want this to be a bigger picture, higher low that leads to a break of 410, you really wanted the market to go today. Because it had the chance. Bulls had the chance today. They had the chance to break this market out. We gapped up. We had momentum off the open. Sold us down this morning, and they sold us. So, when you're traveling, yes and no at the same time. There's certainly headaches. There's technology headaches. It's a pain in the butt to, because a lot of time in trading somewhere else, that's the worst thing. The whole getting ready for the office and traveling to the office, and I want to be researching. I don't want to be on a bicycle going to the office. I want to be working. So I think for me that's the worst environment possible is being in an office. But the travel thing, I mean, this is the business that we're in. The benefit of the business that we're in is that you can do it from anywhere. Take advantage of it. Especially, I understand people have maybe certain family obligations or certain things that do tie them down to one area. But if you have the ability to be able to get out, take advantage of it. It's a big world. It's a big country. It's a beautiful country. There's a lot to see. There's a lot to do, and in some ways it feels like I've been on a permanent vacation for a couple of years now, because I'm still working, I'm still trading, but I'm doing it from wherever I want. I'm going wherever I want, and You know, even as unfortunate as it was to get my car broken into at the end of my trip in Indianapolis, which was the second time I had a car broken into in 2022, which totally stinks. I actually really enjoyed going to Indianapolis. When in my life was I ever going to go to Indianapolis? I was like on a little vacation. I packed to an afternoon meeting one day, but you know, every day after the afternoon meeting and, you know, sending out a few emails, I was getting to see the city and going to different restaurants. And you know, it's funny, at the recommendation of Indiana Dave here, VTF member, I went to a comedy show in Indianapolis. And that was so funny because I live in New York City, which is like the height of comedy shows, and I never go to comedy shows. Yet here I am in Indianapolis, and I'm like, all right, I'm on vacation, kind of. I'm working, but I'm on vacation. You know, let me go to a comedy show. Let me go to this restaurant. Let me check out the oldest bar in Indianapolis. I got to do that too. So that's the beauty of it. You know, it can be a little bit of a pain in the butt with the technology aspect of things, but if you can figure all that out and get it together, I think it's living the dream. So, appreciate the question, and I hope it encourages you to get out there and just do it. From Ricky, I was long the cues at 135. Right after that nice little spike there. Verse that low, which the ADMA didn't catch up to yet, even on the 5-minute. Verse that low for bull flag continuation. You got stopped at 145. This is a classic. This mistake is classic. I know it would have been better to use the 125 low, but I wanted to use less risk. Would 263 have been a better stop? Intraday resistance turned to support. I think that the better question isn't on the stop loss, it's on the timing of the entry, right? My issue, and you hear me talk about it a lot, is when the ADMA hasn't caught up to your stop loss, you have a higher probability of getting shaken out. Also, and I wouldn't call this a bull flag, I would call it a bullish consolidation. There's a difference. Bull flags are a little bit better, but bull consolidation you can trade as well. The difference between a bull flag and a bullish consolidation is that a bull flag is a trend continuation pattern. A bullish consolidation is not necessarily that. So meaning this is not a bull flag to me because it was not coming from an uptrend. That's why it's just a bullish consolidation. The market was weaker, it's trying to reverse higher, it's creating this higher consolidation in front of this resistance. That's all good signals for continuation. But whether it's a bull flag or a bullish consolidation, when does a bull flag, or bull consolidation in this case, give continuation? It typically gives continuation once the ADMA catches up to the base. So once the ADMA catches up to the base, that's when you look for continuation. And that's also when you can feel more confident in that higher level, you know, lower end bull flag stop loss because the ADMA has caught up to it. So when I see a bull flag creating itself in the market, or in this case again a bullish consolidation, I am always waiting. I'm waiting for the ADMA to catch up. I'm waiting for the ADMA to catch up. Sometimes that takes 25 minutes. And that's okay, ADMA is here. Let me execute my trade. I love like when it ends with an inside 5, so it gets really tight at the end, right before it breaks out and gives the momentum to go, which is what you want to see. ADMA is caught up. I'm entering my trade. I feel confident in my stop loss at the base of the flag, and then let's go. It's very typical, and if you look at a lot of bear flags, you'll see it happen all the time. It's very typical when the consolidation portion of it starts to happen and the ADMA hasn't caught up yet. Right before the ADMA catches up, usually a couple bars beforehand, you get a quick shakeout of the support of the flag to shake everyone out. That's actually a good thing if you're long, as long as you're not the person that got shaken out. That's actually a good thing because, no offense, Ricky, the fact that you got shaken out here means that there's a higher probability that it can even go. Because now you're not going to be sung on the offer, which holds the stock down. Or if you're undisciplined, you're re-entering your position, you're chasing. So I think that the bigger question is actually less on the stop loss and more on the timing of the entry. I think you need to be a little bit more patient. I think the timing of the entry, if you're looking at this pattern, is actually after this bar happened. Up, quick little shakeout tail into the ADMA, and we came right back up. This is great. I'm going to go long off of this, and now we'll see if we can go. Otherwise, if you're buying early like that, I do think the right stop loss is the Maribozu low. I know you're saying that's too much risk, and then you're saying maybe 263. I don't know. 263 is a little sloppy to me for that. I think it's more the timing of the entry execution that could have used improvement. Great question, Ricky, from Toussaint. Before the market opened, the dollar was gapping up. This was our signal to short the market. Why didn't you take that signal seriously? I did take it seriously. I communicated in the morning meeting. Why didn't I short the market? Okay. Did you think it was a false flag, or that we would diverge from this negative correlation? Sure. So, kind of think I answered it already, but I can go over it again. Mentioned this morning, my biggest fear on the market and why I did not want to chase the gap up this morning was the dollar. So what we said in the morning meeting today was, let's be patient off the open. Let's see how the market handles the gap, because the dollar is a scary situation here, and traditionally that has caused it to sell off. But the correlation, and that's what you're referring to here, to the dollar has weakened in the month of December. With the way the dollar continued to deteriorate in the month of December, the equity market should have been higher. The equity market should have been higher. Look at the move lower in the equity market with the move lower in the dollar over the course of the month of December. So there has been some deterioration to that correlation. So this morning, I'm looking at a big equity market gap up. Okay, fine. But I'm also looking at the TLT gapping up, so interest rates being down. Therefore, the thought process is, if the market can hold up, and it's certainly an if-then statement because of the dollar, if the market can hold up, then maybe tech growth can give some relative strength because interest rates are down a little bit and because of a January effect. That was the game plan this morning. So what happens? Market rips higher. Was there a short signal here? There sure was. There sure was. This is a shooting star candlestick in a very extended market with a strong dollar. Again, the dollar is just one layer of probability. I don't want to overemphasize it. I do understand its importance, but like I said, that correlation decreased over the course of the month of December. This is a short setup for sure, though. What type of trade is this? It's a counter trend. You want to be involved in the short, and things like that. So for me, that candle was less of a shorting signal and more of a book profit signal. So that's what I was primarily communicating at that time of the day. I was booking profit. I was selling into that move, even if I wasn't short selling. Could I have done a better job and communicated the short sale to you guys off that shooting star high? Yes. Could I have short sold myself to hedge the longs I still had on? Yes. Do I regret personally that I didn't do it? No. Because shooting star is a technical, candlestick short pattern that we discuss in my, number 2 class that I give, the candlestick class. And if you did have the short, I'm certainly not. But hindsight's always 20/20. Doing things in real time is much more difficult. So if you had have you seen large market reactions on economic number adjustments? That's a great question to me. As this market was looking so strong, part of what probably caused this market to fail the way that it did was the number that came out at 845, which was a revised economic number. And you know what? You're right. I don't often see moves that are as big as this on a revised number. Sometimes, but this was like a really kind of crazy reaction. So I don't normally see that. But we did see it today. Market was looking so strong. Obviously, Apple, Tesla were adding a lot of lag to it, and the economic number came down, and it was just an extra piece of information, I think, that just technically wrecked this market down. And the big question, and it's for me at a certain point of the day today, was can the market pull Apple up, or is Apple going to pull the market down? And it turned out to be Apple pulling the market down. So thank you for that. Chi on YouTube. Great question. Great thought process. Anybody else have anything for today? New year. I'm still pumped for the new year. Today I was certainly frustrated a couple of points today that I didn't get the upside follow through that I thought this market could give at certain points this morning and after the market opened. But I'm still overall really excited about this year. You know, we have fostered an excellent team here in the VTF, and let's stick with it. Let's keep getting better and better and understanding the data more and more. I'm still learning. You guys are still learning, and we'll keep that up. So I guess if nobody has any questions, I'll wrap it up for the day, and I'm going to go shovel some snow. Actually going to answer a few emails, and then I'm going to go shovel some snow. The snow's like waist deep on the deck in the backyard. It's sick. Thanks, guys. Have a great night.